Hello again, this is Alex with MasterChartsTrading.com, and today's market recap for Friday, October 12th, 2018. So, lots of action in the stock markets and in financial markets in general. So, we have a big program today. Additionally, I wanted to say that we have a guest lecture, a guest segment by Zach from MotoTrades. You can find him at MotoTrades on Twitter, and you can he was gonna say it as well. So lots of action again, lots of stock action. We'll look at NASDAQ, biotech, semiconductors, financials, materials actually turned bearish. Some of the other industry groups like solar and home builders also hit new lows. So we'll have a segment called Honor Your Stop. We'll look at foreign markets which have been given a severe beating. Junk that seems to be leading the markets lower, and again I continuously stress that this is my primary concern really with the stocks, is the junk debt, the high yield debt breakdown. And investment grades really not doing anything unusual. They are in a bear market. We'll look at also briefly at gold and dollar, natural gas, oil, and eventually cryptos. Alright, so first of all I want to say to please hit the like button and subscribe to this channel if you haven't done so already. This will mean a lot to the team, because we have a team now. We have 3 people actually total working for MasterCharts, and we're trying to expand the services and hopefully to offer the indicators. And you can find out more about the trading indicators on TradingView. I have a couple of published scripts here, so you can find out more about them at MasterCharts Trading. So we're trying to expand the service to, for example, Ninja Trader, Sierra Charts, and definitely to the MetaTrader 4 and possibly 5. So at the very least, I would highly advise, if I can advise you, at least recommend signing up for the mailing list, and then you will be the first ones to be notified of these updates. Also, the pricing most likely will change and most likely go up. But aside from that, let's look at the actual stock market. So lots of things happened in the stock markets. Here's, for example, S&P 500. So on the 10th of October 2018 this year, this was a Wednesday, we had a big sell here, and notice where we closed below the blue indicator line. We can do the same thing on futures. Here's ES1 exclamation points, continuous futures contract, and I actually had a one of the subscribers, obviously people are very concerned about this, and so the subscribers are asking, what would it take to turn this baby market, this bull market, into a bear market for the United States markets? And we're strictly talking about S&P 500 here. So at the very least, for the S&P 500, we will still need to drop a significant amount, around 170 points, and then close below, 2600 or so. This obviously hasn't happened yet for S&P 500 ETF SPY. We can look at what would it take from current levels, about the same, basically about 6% or so. So at the very least, we need to see a close below this yellow line, which currently is at 259 or 260. If that happens, we will need to assess the situation in more detail, and I have in the past used my own market breadth indicators as well to make a decision. So in addition to just simple my indicators and price action, we're going to be looking at the market breadth analysis. And right this instant, as I'm recording this, the market breadth doesn't look that bad. So I would still be, I wouldn't be necessarily just panicking yet. I would start a little bit panicking if we get to the red line for S&P and maybe close below it. I would start worrying a little bit, and then if we get to the yellow line, I would just have no stocks of S&P in my portfolio. Or let me rephrase it. If I had, for example, this particular ETF in my portfolio and we had a close below this yellow line, then I would avoid this and I would exit all of my positions. And this would include, because this chart is extremely important, S&P 500. If I was to see a close below this yellow line, I would avoid stocks, United States stocks, in the retirement accounts as well. So I would exit most stock funds at that point. Yes, it has not yet happened. Let's look at QQQ briefly, and then also maybe at a volume pattern of QQQ. Let me show you. Let me see if I can do a better volume than here. But notice how the price action, see how we closed below the blue line, kind of stayed here and then rallied. So we already see a close below, basically this is my signal to go long, to buy. I'm pretty comfortable here unless we see more strong selling, and actually we'll get to some of the major concerns in a few minutes. But QQQ, if we just took it in isolation and vacuum, this chart itself looks beautiful, and I'll be buying it here. So here's QQQ, and this is a weekly chart. I just wanted to show you the volume patterns here. Notice the volume was already quite large. Notice back here in February of this year, 2018, we had volume of similar proportions, and this was basically the bottom. So with QQQ, with NASDAQ, it's quite often to see large volume spikes at bottoms of the range. So again, I would not be surprised if we stop here and just make a fresh high. Alright, so let's look at some of the sectors, sector analysis. So let's look at some of the weakest sectors first, and let's look at basic materials. Now, basic materials is not a big part of the United States stock market. It's like 3% or so of the entire market. But notice that there's a significant selling here. So notice that I sent an avoid to my subscribers on the 9th of October. And then we continued lower. Now, rebound is absolutely, I'm almost 100% that we're going to rebound probably to like $56, $56.5 to $57. But this chart I would be very cautious about. I think we need to see, for me to become bullish on this chart now, I would need to see a close above this blue line, which is at $60. So this is a significant distance to cover. And additionally, we have two very strong resistance levels that are currently at $55 here and then at $57.5 here. So those two resistance levels will need to be first overcome before we see a breakout. This obviously hasn't happened yet. This one, even more worrisome, this is financials XLF. Notice that also had strong selling here on 11s and 12s, and we had a close below this yellow line. So this is not a good sign. Usually when this happens, that means the bears are going to come out of hibernation, and at the very least we'll see some selling at the yellow, which is currently 26.60, but I think the bigger selling would be at 27.50. So if we see a rebound to 27.50, I would not be surprised if short sellers come in here and start selling. So let me, in fact, put an arrow there. So if I was a short seller, and I'm not currently, because I think the general stock market is still bullish, but if I was really, interested in selling, then I would potentially short here. So notice the price action was so strong, and I literally didn't have a chance to send. I sent a caution alert because I thought we're gonna close above the yellow, but actually we closed below the yellow. So overall this is going to be basically an avoid for me from now on. So I would look for a shorting opportunity if you so desire and if you're sophisticated enough around 27.50 for XLF financials. Couple more industry groups that hit fresh lows is XHB and 10, and let me record those a little bit about them. So as I've recorded this in the past, and this comes up time and again really, we need to, in the trading business, there are many things that are working against you and very few that are working for the trader. So it's a very tough environment because we're playing against professional money managers, and you know, the beginner traders usually lose money, and they usually lose it very quickly, and then they just give up. Some people decide to kind of continue with the trading and eventually learn their ropes. Here what I wanted to show is avoiding, or rather honoring your stop. So basically here we have a setup where if for some reason you had a position open in this ETF, which is XHB, these are home builders, and let's say you were trading it back in August of this year. So the way I look at this chart is if I saw a close below this yellow line and I saw no closes up to this point below the yellow line, then I would avoid it, and that would also mean if I had a position open, in other words, I was long, I bought it somewhere and I just was holding it, hoping it will gonna go up. But here, what happened on the 13th of August 2018, this year, we saw a close below this yellow line. So basically we made a new low and we closed there, closed at a new low. So this is not a good sign for me, and I'm immediately exiting. I don't want to think about anything, I just want to get out. So if I did that, that was probably a correct move, or definitely a correct move, even though there was a slight rebound afterwards. And here usually people get their hopes up, like, oh yes, maybe it'll break out finally. It does not break out, and then short sellers come in here and start selling. Like me personally, I would short it at the red line, you know, but it will depend really on your preference of trading. And notice what happened afterwards. I got out. I would have gotten out here, and if I didn't get out here, after just a few weeks, I would have had an additional 10% loss because the security in question, in this case XHB, collapsed even further. So this means honor your stop. What does that mean? It means if you have a stop, if you have decided that you're going to exit at a predetermined place before you put on a trade, before you bought or sold anything, then you need to honor it. And this is psychology of trading. If you don't understand what psychology of trading is, then definitely contact me, because I have a psychologist that works with traders, and you know, she could work with you, my wife. She could work with you to resolve these issues. This is a purely psychological issue. In other words, you just have to honor your stop, no matter how much it sucks. Another example of the same type of thing, same type of behavior. This is a behavioral trading. You need to really just, you know, just honor your stop. In other words, get out. Yeah, if you're wrong, you have to get out. So here's solar ETF 10. On the 13th of August of this year, I see a close below my yellow indicator line. At that point, I'm just telling people to basically avoid it. So let's say you had a position open at that time and you didn't get out. What does that mean? That means you have another 13% loss on your hands. Notice that after the avoid alert, after the stop has been triggered, if you didn't get out, you got another 13% loss. So this is how the market punishes people who are not aware of themselves. All good traders that I have talked to have some sort of a self-awareness practice that they do. Could be meditation, yoga, mindfulness practices, many different things. But the problem of not following your own plan is a big one, and it happens constantly to people. So again, honor your stop, get out when you have predetermined this, before you have any emotional response to this eventuality.
Hello everybody, my name is Zach. I am a options trader. I've been using Alex's indicators, the MasterChart indicators, to swing trade options. I'm going to just show a little example of a trade that I did to using his indicators. But first I'll just give you a background. I mainly trade equity options and some futures. I'm predominantly a swing trader. I do some day trading, but not a lot. Mostly I swing trade, and I using the MasterCharts indicators for my entries. I've been trading with Alex for about 2 years now, so I've been with him the whole time that he's been implementing the indicators. They work great, and they've been working well to find entries for my options trades. So I'm just going to give you a little example here on Disney. Back around the 20th of September, we had price come down and try and find support here around the blue line. I was talking to Alex, and we were looking at this as a possible trade. So we were looking at it around the 20th, and we got a close above the blue line here on the 20th, and then the next day we got a pullback, giving us a nice entry for options. And we were looking at taking the November 115 contracts. They were going for about $2 on the bid, $2.20 on the ask at that time. So, you know, on this day here, you could have got them actually for a little bit under under $2, and we were taking them. It was the first strike out of the money, so we needed to be above 115 to be in the money. But you can see the next days we had a nice run up after that. So I think these traded from about 220 to a high of about $5 or so. And for me, I like to just take profits when they're there. So, I mean, if you can get right here, you know, you were looking at, I think I messaged Alex here on the 26th. They were going for about $4 that day. So 26, we were right here. So, you know, about when we got into the money, they were about 100% gain. I like to take profits there at about 100%. It doesn't always work out that great, but you know, if you can get that, great. And how you manage, you know, the trade is up to you. But I'm predominantly a short-term trader, so I, you know, like to take profits. If you can get a strong move like this, I think it's a good idea to take profit. But yeah, so I just wanted to show an example of how I'm using the indicators to trade options. I'm not really taking as many trades anymore in shares. I'm using the indicators to trade options. I like it because it gives you a way to, you know, maximize your money. Like if you're not trading a big account, you can, you know, just take a couple options, you know, contracts of options. I mean, you know, a $400 trade, you would have doubled your money there, you know, in a couple days on that trade. So I think it's a good way to, you know, maximize the capital you have, and, you know, it makes for good trades. So I hope everybody enjoyed the example. If you guys want to contact me ever, if you have any questions or just want to chat about, you know, trading, I do have a StockTwits account here, Moto Trades, and I am also on Twitter, same handle, Moto Trades. So feel free to reach out to me if you ever want to just talk and you know, look at some charts. So thank you, everybody.
Continue. So we have looked at some of the stocks. Let's look at some of the foreign markets as well. Let's look at the biotech and semiconductors. Yes. So XBI, the proxy for the biotech market. It's a high beta sector. In other words, it's a high volatility sector. The stocks within the sectors, this sector are, they move a lot basically. So don't be surprised when you have this big move against you, really. Yeah, you have to take the risk, and the higher volatility stocks sometimes provide with higher returns, but when you are on the receiving end of this, you can end up with a bigger loss. Again, this is all resolved very simply by buying only a predetermined number of stocks. How many shares are you going to buy? So, for example, for this trade, I would have said that for a $100,000 account, I would have been able to only buy 81 shares. Notice there is the number. This would guarantee that you're not going to wipe out your account. If you buy more, then you will have a bigger chance of wiping out your account. So it's always a trade-off. So biotech right now, very close to bearish levels, really. You need a very little push to push this into a bear market. Overall, not a great sign, but we'll need to look at the general stock market. If the S&P SPY itself continues lower, we got another 6% before we start panicking. Yeah, we'll play it by the, take it one day at a time. Semiconductors, very similar. XSD, so I, basically caution on this one. I sent to my subscribers as well. Same goes for SMH. SMH actually is a, another popular semiconductor ETF. Notice it's completely, I would say it's a breakdown. I would avoid it completely, basically. Okay, so then next up is options. And, oh, sorry, I meant to say we'll look at foreign markets first. So let's look at Europe, VGK. Here's a proxy for the European markets, or you can do EZU, it doesn't matter. So basically at new lows, not a good sign. This looks pretty textbook looking bear market. So notice initial breakdown here on June 25th, 2018. Basically pullbacks towards levels where shorts come in quite nicely. Here's one just perfect setup here on 28th of August to go to short. Not a great looking chart at all. Yeah, I would definitely avoid European equities. I have no foreign equities in my portfolios, in my retirement portfolios or otherwise. And then we can look at Japan, EWG. I would avoid it as well. Notice we have a breakdown below this yellow line, so I'm avoiding the Japanese stock markets. Canadian stock market was just a big outlier. It was an enormous drop on the 10th of October and a follow through in the next couple of days. So the Canadian market looked promising, but just collapsed basically. And then finally here is Mexican market. I kind of follow the Mexican market also. I also look at the emerging markets, but Mexican markets because I live in the United States, so we have a proximity to the economy here. And of all the markets, actually Mexico doesn't look too bad. Pretty strong if you ask me. So one of the stronger markets, and maybe I'll look at the Mexican peso later on in the currency segment. So another proxy for the worldwide markets are the emerging markets, and here are the emerging markets EM making a new low on 11th of October of this year 2018. So here is the breakdown on 27th of June. You can see a clear breakdown below this yellow line. My indicators, you can find out more about them at MasterChartsTrading.com. But notice that basically from then on we had aggressive shorts, not even conservative shorts, even aggressive, selling. Shallow rebound, selling. Shallow rebound, selling. I'm definitely avoiding it myself. I have no foreign equities of any sort in my portfolio. the portfolios. So, for example, here's another one: China, fresh low. India, close to fresh lows. Russia doesn't seem too bad, RSX, but I would still avoid or short it. Like, put this arrow here. And if I was trading it, this would have been already enough because you can do options here. And this would have been already enough to make money. Turkey, for example, you know, basically vast majority of non-United States markets are in a bear market. Here's frontier markets, some very volatile and dangerous, well, not dangerous, more risky investments. So frontier markets, FM, bear market, no, it's just non-stop selling basically. So to summarize, I don't see too many non-United States markets which are at least somewhat bullish. The only one I kind of monitor, maybe there are other ones, but the Mexican shares, they don't look too bad. The rest of the world markets kind of I would avoid really. All right, let's look at the junk debt, so JNK. I started worrying about JNK very strongly around February of this year. Notice we had a breakdown, basically a new low. Lots, you know, a couple of dead cat bounces where we shorted them. I didn't personally short, but one could have shorted it. Another opportunity to possibly short this was in August of this year. I would have put my stop above here, this blue line. And notice we had enormous selling here and over the past couple of weeks, and we made a new low. So this is obviously not a good sign. It's not a good sign for multiple reasons. I think in number one is that junk bonds, the high yield bonds, were they moved together in lockstep with the general stock market S&P 500, and we made a new low. So with the rest of the world really pretty much already in the bear market, there's a possibility S&P will roll over and join the world. The opposite is also possible, but we'll basically need to take a day at a time. So here we see a fresh low by the junk bonds, and this is not a good sign for stocks, again, because of correlation, because the stocks and junk bonds usually move together in lockstep. All right, investment grades. So let me briefly look at TLT, also at fresh lows, and you know, we had a initial breakdown. I would say as early as February, but yeah, definitely around February we had a bearish turn, and then from here on we can basically short TLT and only think about selling it. Notice that we had multiple opportunities here. I wasn't really keen on shorting it, but the last move, man, was just beautiful. Look at the size of this thing. To the downside. So if you shorted it, then you have obviously made some good money there. If you did make some good money, do write to me about it, especially if you use my indicators. So here TLT, you know, this just means that the interest rates are moving higher. Here the 30-year Treasury yield, we are at 3.31% currently. And this is not helpful to various sectors which depend on borrowing. So interest rates are going higher. This usually doesn't bode well for some of the interest rate sensitive sectors such as utilities and especially real estate. In fact, real estate doesn't look good either. Okay, so let's continue to Forex. Okay, so here's dollar index, DXY. This is a bullish chart for multiple reasons, but here's number one. We saw a breakout as early as 25th of May, and before that, we were trading below this red line, and then we saw a breakout. So from here on, basically, we're looking at bullish outcomes and trading accordingly. So within the dollar index, there are multiple currencies. So here's I don't want to show it every single one of them because I'm actually sending alerts about Forex now as well. Although honestly, I think the Forex trading should be done kind of like by yourself, because sending alerts about them sometimes is more difficult. But not impossible. So you can definitely sign up for my alerts and indicators at MasterChartsTrading.com, and then you can get the alerts as well. Here I wanted to highlight a couple of trades: US dollar versus Japanese yen. So I myself had a position here, and I had multiple exits. Overall, I would say I got about 200 or so pips on the average, but notice that it went as high as 350 pips. So overall, you can get quite large moves with my system, buying and selling around the lines, basically. Another highlight, let me do see US dollar Swiss franc, so USD CHF, and here is that move. I think I already showed it. So we sent an alert on 27th of September, and you can see that big move here in our favor, 180 pips or so. So again, overall a very good trade. Going back to the overall dollar index, I think it's in a bull market, but the implication here is, of course, for gold. So here's XAU USD. You can see that we had really big surge here on Thursday. DXY dropped, a little bit, so it's not, terribly unusual for gold to move that much. It's a big move, big candlestick. Looks possible that we reversed. I would still short gold, gold miners and gold, yes. Where would I short? I would short at conservative levels at currently 1240 if the price action confirms. Here's GDX, same thing. Currently, we're approaching that level, but I would like to see something similar to what happened here in July of 2018. Notice that the price came up. Let me just zoom in on that price action in July of 2018, and yeah, so price came up above the red indicator lines and then boom, closed below it. And so that's what I usually would do. I would short here and put a stop above the blue line. So I'm waiting for something of similar nature. I want to see a high above the red and then a close below the red, and usually that's where I go short. All right, let me briefly look at the commodities as well. So natural gas, oil, and crypto. So this is oil, US oil. You can do US oil futures, so CL1 exclamation point. This is a bullish chart, normal pullback. I would just do nothing at this point. If we get to 67, then I would consider buying it. Natural gas looks interesting. It appears to have broken out. In fact, here's one. This is the latest alert. If you trade natural gas futures, alert was sent at 326, and in fact, the price did come up to the target. So if you had, for example, UNG calls, then you would have made some money already. Now, natural gas is very volatile, so you need to really know what you're doing, because see how it came up and then just collapsed. So you need to really know your position sizing and how to trade natural gas. It is much more difficult, I think, because of the volatility. So do be careful. Be extra careful with natural gas. Briefly about the Bitcoin and various cryptocurrencies. Again, find out more about these lines in the chart by going to MasterCharts Trading and clicking on alerts and indicators. Now, a few weeks ago, I thought, maybe Bitcoin and other ones are bottoming, bottoming, and they're gonna surge higher. But this price action on the 11th of October, I think, put a nail into that thinking, that coffin. Because notice that we're making new lows now. So here's Bitcoin, Litecoin, new lows, Ethereum, new lows, and there's that XRP USD, the Ripple that I thought, wow, look at this big surge, and I thought maybe we'll break out finally, and look at the narrow and trading range. So far, none of this seems to be coming to fruition. You can see actually here on the 11th of October a break below this yellow line, so I think we're going to see more selling here. Alright, that's it for this week's recap. Please head over to MasterCharts Trading, click on alerts and indicators, and sign up for one of the monthly or yearly deals. Also, if you're not yet ready to sign up, then at the very least I would advise to sign up for the mailing list. The reason being is because we are going to be upgrading the services significantly, and also we're going to be hopefully offering new services such as these same indicators that you can use currently on TradingView, and I can share the TradingView indicators with you. These same indicators hopefully will be available on MetaTrader as an expert advisor, possibly on Sierra Chart and on NinjaTrader, and maybe some of the other ones, other platforms. But at the very least, we're hoping to expand into the MetaTrader market and the NinjaTrader. So again, thanks for watching. If you have any questions, send them in, and have another wonderful trading week. Thank you. Bye-bye.